All right, good evening, guys. Kenneth Tortoise Capital, nightly strategy podcast for Friday, April 14th, 2023. We had a good podcast with the Alpha Mind organization over in the UK. They're affiliated with the Society for Technical Analysts, and we ended up going about 90 minutes on psychology and preparation. And it was really something special. We'll get you the link as soon as the interview gets published. And the transcription of it is going to be the chapter on psychology in my book, in our book. So I'm looking forward to that. So let's start with the swing portfolio. So these are all going to be on 30-minute charts, starting with Alcoa. So yesterday, Alcoa, we had and really at the close of the day in Alcoa, 2 days ago, we took the COTA 2. It closed well yesterday. Today, it gapped up and started selling off, and so we just made bank. It continued to collapse, so it took an intraday swing short for about 1.5. And I was happy to get that. AI, the software company, we just scratched the SSC that started yesterday. No overnight position. Actually, if I was doing that correctly, that should be here. Yeah, ended the trade there. Caterpillar, yesterday was the COTA 2. It gapped up, and I held it, and it's closing well. So we're up about 2. I think better play would have been to have cashed somewhere in here. The market was getting really weak, and then considered whether or not I wanted to re-enter. I think I would have re-entered there, but I would feel more professional if I had taken that exit. Still, there we are. Cliff. This is one that we initiated yesterday at the COTA 2. Although in my mind I was treating this as an SSC because we had that lower low. So I think this is actually, if you look at this, it feels like a COTA 2, but that's really because we had that successful trade. This is really an SSC. And then today, it started collapsing right away, and that led to the PSAR flip and the collapsing dragon. And I just took the one-day intraday +2 on it and flat for the weekend. That was Cliff. CVS, we started the SSC yesterday. It opened poorly and started to collapse, so I got out with a no lose plus dinner for 2. Didn't get this, although it was there. Span of control. Dish Network. We talked about this yesterday as the Godzilla and the collapse, and that's what it did today. Yesterday's poor close resulted in more pain and suffering. The PSAR flipped. Standard risk 1 to 2.5, and it just felt proper to close it on a down note and put it to bed. But I'll be ready to be short on that again. Devon Energy actually closed pretty well. If this was a weekday, I probably would have taken that, but I like the idea of being reduced risk over the weekend. This is a 2-day move in Electronic Arts we missed. It did not sell off as hard as the rest of the market did, today. This is actually pretty moderate. So this is actually feeling like a zero state, like it's ready to go next week. So I like that one. That's setting up nicely. It's like wine. You got to let it breathe a little bit. Emerging markets. So we got this gap and go, and took that took the exit yesterday at the close, and then today it gapped down and started harshly selling, and I took the intraday exit at the edge of the dragon. There's the dragon for you. That acts as that noise buffer, keeping the man down. But it had rolled, and I was happy to get out of that with +3 and no overnight risk. So that one felt really professional. Now notice also, per yesterday's discussion, this is where that leaves the Red River, and it goes into spring here, and comes back into the Red River here. So the extraordinary move is over, and that feels like a pretty good exit right there for +3. I would just note that on the 30-minute charts, you have time to do that kind of internal consultation. This one is just so much fun. ETHE. So this is a long only one. So we've been enjoying this one. The long-term entry from way back at 550 is still in play. We're going to see one from my brother where he cashed the 9-day chart. But we took a double entry on that yesterday, and today it opened here, just went running up like a banshee, new 30-day high, came back to here, and then closed and started falling. And you know what? Sue me. I'll take that on a double position. And then this became an orderly reversal, and the R10 just nice and tightly curled, and that's a 1, 2, 3 entry, and made enough on this one to just say, let's put one back on, and then it closed pretty well, and we're holding +3 going into the weekend, and this thing is going to look amazing to everybody that's looking at end of day or end of week charts. ETHE is going to look flat amazing, and that's why I'm content to hold that position. Mexico, we had that nice gap up and go yesterday. It started closing well, and I added a position at the close, and then today it started to sell off. So this is about a scratch. What I lost on this one is paid for by this one, so that whole thing is about a scratch. And then this became a stop and reverse, and I was glad to get out of there at the edge of the dragon with about +2, and that was the sound of thunder in the background. Brazil, no trading here. I like how this is setting up. If this is a weekday, I probably take that right here and treat that as a COTA 2. But I was in no appetite for risk over the weekend. It was probably that long podcast on psychology talked me out of that position, I guess. Intel. Yesterday we initiated the SSC. Today we closed it at a scratch. Missed the short. But we're flat on Intel. International paper. We ventured onto the SSC yesterday with standard risk. Today it started to sell off, so we scratched it, stopped and reversed. Took the intraday gift at the edge of the dragon for +2. There was a broad weakness in the market today early. Everything was getting smashed. This is IYR. Again, the SSC Venture scratched. It just kept failing, though. And when it broke through the PSAR intraday, I put the standard risk on. And this is one that I'm holding. because this closed so poorly below that previous support level, and it's still out of the Red River. I think this one could go south in a hurry, and I have a buffer of about plus 2R on that. And there's nothing sexy about IYR as somebody wants to hurry up and buy it on sale. So this one feels like it could continue to go down. So that's one I held. KRE, missed it. Dagnabbit. So this was the COTA 2 that we started here, and cashed it today. It ran up and then started running down and cashed it and just missed the PSAR flip. That's one that could fail again tomorrow. I should have been on that one. Span of control. McDonald's, I talked about yesterday why we should be in this thing, or should have been in for a long time. So just out of a sense of self-respect. So that was the one we looked at yesterday. And then today, just like everything, it got smashed. But it actually resolved pretty nicely and made a PSAR flip. And at the close, the entire market actually had a fairly nice recovery. So I said, why not initiate a conversation with McDonald's, knowing that that's like an all-time high right there. So if that goes, then we're on board. We're finally on board that transcontinental railroad. So we'll give that one a try. Merck was the same discussion yesterday and almost the same pattern, and I just didn't want to initiate two at the same time, but that's pretty good. This is hardly any sell-off at all, and this has been a really nice run-up in Merck. So I'm ready to get on board the Merck train as soon as it breaks the PSAR, like right here. I'll be ready to get on that. Marijuana. This is the 2 days ago we re-entered the COTA 2 and took it at the close. Today it started to sell. Standard risk box. It was really going well, and then all of a sudden this thing just bolted, and I got out of it with +1, but I gave back a lot right here. Probably gave back 3 out of the 4R. This was about +4 at its peak, and that was a desperation to keep 1. And then it immediately started to fail. So I'm going to be ready, I think, to play that break or this break. This really looks like it's in play lately. I mean, when you look at the size of those moves, this thing is in play. And, it's not all that liquid, but I'll be ready on Monday. Clean energy, kind of the same deal. We had a short which scratched. I initiated the intraday short here on this collapse with standard risk. Took the gift to +1. Just ring the bell. Sometimes you just want to ring the bell, Nothing wrong with that. Rivian, there's been a persistent weakness on this thing. We tried the short and nothing happened. And then today, big gap down, sold, and then started to fail again. So I took it in the curve with that same standard risk box that we're using, and it stabilized. I gave it as much time as I could, but it didn't collapse further. So as it entered the dragon, so to speak, I took the +2. This was the tale of two markets today. So yesterday was that really strong S&P move, and then today everything was going south in a hurry, and then it did a 50% retracement intraday to close right in the middle of his little yin-yang, right? So that initial move was causing most of those cashes and in some cases stops and reverses. But to the weekend guys, that's going to look like a COTA 2 and not a bad move. It only ended up losing, a 1/4% today, so that's not all bad in the great big scheme of things. Treasuries, I just missed this move completely. There was a collapsing dragon here today and closed poorly, so I think there's a zero state setting up here, and the recovery from 105, 105 is a nice round number. That's been a springboard before, but then the collapse could take it down to 100. So I think it'll be in play next week. Tesla, the heartbreaker. I just haven't been able to get a grip on this one. I like how it stabilized today. This looks just like that S&P move, and it has stabilized nicely here. So here's how I'm looking at it into the week ahead. You've got a risk box that is defined by the space between the PSAR dots. So I'm just going to set that up as my zero state and risk, which is 185 to 182. So that's a $3 risk. And Tesla's R10 over here is $1. So that's about the size of a frog box. That risk there is 3 times an MMRB, and that feels correct. And then if I look at the range stat, it can move $10. So if it takes off Monday from 185, say it opens, it could go to 195 in one day. A move from here to here, that's the size of the range stat in Tesla. So I feel content that that's where my risk box needs to be for next week. I'll set I would plan to go long from there or short from there, and then use this as my yellow zone risk box right in here with my little $3 risk. Okay. Let me know if that helped in the chat. Finally, U.S. Steel. We tried the PSAR flip. It closed well today. It just started selling. I managed to get out of it with a scratch. Should have been able to get like a no-lose plus dinner for 2 somewhere in there, but that was sloppy. And I was therefore in no mood to go that way. So that's the swings. Pretty happy with the captures of this week. All right, so let's go to the sniper trade of the day, and this is ETHE. So I had a vested interest in this one because this is the one that had the double. It had the double positions on it from yesterday, and a long-term swing entry on it. And all it did was give us a really nice gap up, and it opened here and just started going straight up. And this is before the OR3 even closed. It had already moved 2 standard risk boxes off the low, and it was 2 of those boxes for the positive gap. And this was the dominant winner yesterday, so I just decided in the opening 3 minutes just to take it and use a standard risk box as my risk. Then I'm going to figure out how fast can I get my stop to no lose. So this was just getting on board the rocket ship. if I can say it that way. So the initial move up in the morning, right from that, was sufficient, and then the 1, 2, 3 exit should have been here, and then I got filled here, so that gives me +2. Thank you, little rocket ship. Now I can't get short ETHE because it's a note. If you were trading ETH USD pair, you could. But this one was interesting now because it holds support right at the low of the day. And the R10 reverses, and then you get this nice move. And I thought, why not? Thanks, K2. Not so much. That's the problem right there of not being able to be short ETHE, but you can be short the directly with ETH USD. So probably an SSC. +1. Now we have our humble and lovable cloud 2. Good dog. +3. End of the day, although there was probably another little wiggle in there. So that's the sniper trade of the day. Thank you, K2. Yeah, my brother says the ETH gold is on Owanda, has been a steady performer. If you ever shared a chart with us, we might know that. Just saying. No offense. How about helping the team once in a while? Selfish. Really, I mean, that's. Don't make me say that again. All right. All right, here's Woj. Bitcoin on 30 minutes. So this is a stretch for him. Okay. SSC. Puts it on. put a second position on, was tempted on the third one, and after this little spike run up and it reverses, he says, I'm good. I'll take 2. I'll take 5.3. Look at that young man stretching. I like to see that. Satya on Tesla. That's a gap, finds support, and starts to reverse, moves the risk box off, and that's the OR3 entry for 1.5. Kata 2 re-entry, +1 for 2.5. Just as you like it. I think this is Hamad. Remind me to remind you to put your name on the chart. Find support. There's the PSAR flip. He waits for it to clear the hump and waits for it to clear the Z3 pinch. I don't mind that. I think you could maybe get in here. Still, that's pretty good. Now, when you get a nice 2-bar move and it's already past Z3 and starts to sell off, and then you take the exit here, notice how harsh to your psychology that feels when you have a maximum favorable excursion at the Z3 here. And if I can just find a way to exit somewhere in here with a no lose plus dinner for 2, that'll change your psychology. And oh, by the way, when you see it then crossing the Bollinger Band mean, you have this trade. Same risk box. And you get to ride that whole thing down. Zero state, frame it in both directions. You'll see the same, so it's the same trade as this one in the pound, Aussie dollar pair. I love this, the double top, the rollover, the break through the VWAP and the Bollinger Band mean. Standard risk flows right with it. When you see that, and then you see it leave the Z3, that's either a gateway to huge gains or it was one bad print and it starts to reverse. Now, here's where it has now come back, a full risk box after a Z3 excursion. You can take that as the gift, or you could take it as it enters Z minus 2. Instead of all the way back here. So, although I love this capture, which is about probably +1, that little risk is probably what you ended up capturing here for +1. But look at the give back. So once we learn to start seeing price movement on a ladder that is calibrated to your 1R MMRB, and you see that kind of a collapse, and then a gift, then really you put this little price ladder on it, and you start saying, where do I want to get? I want to give back that much. Okay, then take that as your exit. Oh, I want to give back that much. Give back. So you'll end up being. It'll be easy for you to start seeing this as the abnormal gain. In a very short, compression of time. That little gift happened right in there. That was 3R gift. So that event has to trigger something. Compare that to, add that onto your internal notes. Should have increased his position at 8458. I guess you're saying right there. Yeah, I wouldn't mind that because you're here. It rolls over, and this is a collapsing dragon. So you could take that. Now, if you do that, that makes this excursion and this collapse even more important because now you're doing it on 2 entries, and then you got to get out of you can't let that second position come all the way back to scratch. You can't give back that much on 2. That'll burn out your neurons. Okay. Just slap a 1R trailing stop on it when it breaks out, and then you'll be fine. Here's red. Plays the entry here with a tight wrist box. Takes half the position and the second and a half position. That's pretty nice work. The reversion trade on the PSAR flip. So you might not get that. You should be able to get this on the Z3 pinch that is now expanding. And then that would be an appropriate 1, 2, 3 exit. And then you could capture this. And then there's a PSAR flip potential. And there is a, don't worry about the MA30. That PSAR flip would give you this. Then that could be a second position. And then you get to eat all of that. Whoa. Whoa. And on this one, I guess you're long here. Not sure why. Yeah, you should be short. We should be short from here. And then if we're not short there, then we got to get short here where your exit is on this 1R loss. And then you capture all that move. And look at what that move would give you. Yikes. 1, 2, 3. There was a 3-banger waiting. Back to Hamad. This is the Commodity Index Tracking Fund. This is DBC. Here's our PSAR flip. This is a entry at a Z3 excursion. When that doesn't work right away, I want you to get out right here when it comes back to the edge of the river. Just take that one and take a 0.3 loss. If that's your full. And then we could actually be thinking about getting long here because of a Kata 2. DBC's hard to trade intraday, I'm finding. That's tough. That's a 15-minute chart, but that one's tough. It's tough because it's an exchange-traded note that combines a bunch of different commodity contracts in a single entity. So it tends to not have as much volatility as the individual commodities. And it gets pushed around by what the commodity futures are doing. And then that reacts to it. All right, so here's a nice big run up. It's like maybe we can get a Kata 2 in here somewhere and take advantage of that long train running. And then there's the PSAR flip. That's nice work. Now, not much happens, and so when the PSAR times it out, that's a very good scratch. Amazon is a hard one to trade because it's so darn liquid. I'd rather see you on like a one of the semiconductors trade a lot better than this one. Target selection. Microsoft. So here is a Microsoft has been really good, and now here's a gap down. It finds support. There's a 1, 2, 3 entry here. With a nice tight wrist box. Then this move comes up and almost gets to the Bollinger Band mean, and then starts to fail. And then the 1, 2, 3 entry would just say, all right, okay, you didn't get me. Now, when you take this long, though, and it doesn't even get through the Bollinger Band mean, that's a good exit, and then we should be short here. Failure to follow through is information. It just may be that's the case. And then when this breaks down below here, even there's a good short. Same thing. Frame trades in both directions. Big gap down. Can't get through the Bollinger Band mean, starts to fail. Cut it, short it. That one's good. That one's good. All right, Tim. So he's working on the 30s now. I asked him to take a look at this. So on the 30-minute chart, I don't see that as an entry. But if you get that much and starts coming back, I like capturing. The PSAR flip I can see. So that's fine. On this continuation, this is supposed to go right away as part of this entire complex because it's above. That's supposed to go right away. When that doesn't go, you don't even have to wait that long to get out. You can get out here, and then we can be short on this. Same thing on Apple. I think I think on the 30, this is supposed to go. When that rolls over and hits the edge of the dragon, I think you can be out there. If you wanted to, you could be short there instead of here, and then you should get paid on that move. Expand this out. That's pretty hard to see. But we should be long from here with that nice wide box like that. It'll take some time to get the feel for that 30-minute. All right, let's see. We are in Woj territory here. So we're on the 3-minute. OR3. Long. Runs up. Cashes +1. Yeah, could have been. In that little bend of the dragon, that's where I like to be. I think of that like the elbow. When this thing crosses through the elbow, I like that one. In the same way that I like being short there. And short there. And caught a 2 here. I like the OR3 effort. When that doesn't work, get out at half can be long here instead of here, and then that becomes a pretty nice. That's still pretty good. The OR3, it scratches, he gets short and covers, he gets short and gets paid, gets short and gets paid, and don't be taking no break. That was not authorized. There's two positions here. This was Hulk smash territory, and then caught a 2 entry. Build up your endurance. OR3 short, stop and reverse there, but that's still okay. Gets paid, caught a 2, stop taking breaks. 3.8 for the day, 12.5 for the week. So here's my brother's ETH. So this was the entry from the 9-day chart, and the signal to get out on that one was here, which gives him 2.5, and then he's trying the 30-minute chart, so he gets the gap up and go, and takes 1.1 while he was doing yard work, so we'll take that. Nothing wrong with that. Shift to the weekend reports. Bullish quiet, that's very good. This was a pretty strong close, all things considered. It didn't give back much. The risk Z is still postured for a reasonable move up. We're in green bullish. ADX is starting to get better. The ETF2 theoretical model increases 20% exposure, as now 8 of the 10 big indexes are on a buy signal, in other words, above their 4-month moving average. It's still tech. And then the globals. That's the Euro-Asia mix, and this is the European 350. That's the holdings from the start. And then the current leaders tell you, oh, it's still tech, the Euro-Asia blend, and Europe. So the 15 days of holding this has done really well. And the exposure is increasing. In the RLFF, regression line fractal framework, I'm feeling this Kata 2 kind of mojo. Now, that should be able to get above 420 for this channel to still be true. So it's got some work to do, but I like the fact that it's starting to recover. 420 is the test. If it starts to fail, then we come back and we say, well, it could probably get to halfway and then all the way. So cautiously optimistic. We have just had a nice run in the summer, and it is flattening out and stalling a little bit. So now what's it going to do, this or that? This is MACD Four Seasons theory, but it is above the Red River. That's nice. And that's about how long it can stay above the Red River. Sometimes it gets a double scoop like that. If this is just normal breathing, I got to believe that this is starting to be a concern. You have a nice long move up, half a move back, half a move up, this or this. I don't know. If we just time segment that, that's the least surprising move. This is the move I want, but that's the move I'm preparing for. So the 3 and the 9-day sniper health check, looking at a smoother look at the trends. The channel is even clearer to see. This is the next critical test point. That's at 430. And then this is a very nice little recovery move here on the 9-day chart. And it's starting to widen its distance away from the PSAR. So we like to see old angle alpha getting bigger and bigger. That would be good. And then this gets us back to the last test at 480, which was peak joy. The 150. So now we're looking at the 150-day look back. There's the 150-day high. Notice how when that rolled over and the dragon rolled over, and then the PSAR flipped, you're getting those alerts. And now we had leg 1, leg 2, and is this leg 3? I don't know. Would love to see it break above 420. That's the critical test. This is today's range. As part of all that, here's the 10-day look back. Here's the range from 30-day low to 30-day high. So that all feels good. And there's your Kata 2 feel to all this. Okay. This is a really important test right here. Next week is going to be decisive. Is it this or is it that? Should I go or should I stay? The clash. What really worried me this morning, and was that harsh selling, because all I could see was this, and all those long positions that we've been building. All I could see was losing all that. So that accounts for aggressive exiting and tentative re-entries. And this was the tale of the day, right? Closed really well yesterday. Quick sell, triggering the PSAR flip exits, and then a 50% retracement for the rest of the day to posture for next week. And now it's perfectly balanced between, is it this or is it that? There's exactly no way to know. I am prepared for that contingency. If I was going to hope, I would say I hope it's that. And then there may be some tactical trades inside this yellow zone until we get the official breakout. So that's my mindset going in. Perfectly balanced in a zero state. As near perfect as I can be anyway. All right. Blended monthly rebalancing portfolios now. Weakness in U.S. mid-caps, U.S. small caps, real estate. So only the large caps now. And notice the difference that you get by avoiding the pain and trying to find the joy. There is the Qs and Euro. Now remember, that's what we've been holding since the start of the month. And actually last month too, but so the potential gains that you get by holding the winners as opposed to the losses that you avoid by avoiding the losers even on a portfolio as small as 13, you can start getting significant price differences and performance differences. This little recent recovery here in Latin America has pulled it off the bottom and up into the stack. It hasn't done enough yet to compete for top space, but we got to applaud the effort. You got to like that. Now, when we add the XL series, ETF 13 plus the 9 sector spiders like XLK, Y, IP, B, V and E, U, and F. This is the residual pain and suffering from the financial crisis, from the banks. And you can see that S&P Tech is, if anything, slightly better than the Qs, but it's a coin toss. Consumer discretionary 3-month is starting to cool a little bit. But winners continue to win. Now in the ETF 32, we take the ETF 22 plus 10 additional things like gold and silver and clean energy in China and that kind of stuff. Clean energy, just really miserable. You can see Brazil has been benefiting from that whole Latin America recovery, and if anything is a little better. So actually it's Brazil that is pulling Latin America higher. Same methodology, you then apply it to the modified Dow. And let's see what we can see here. The first crack in the Boeing War Pig success story, which has been just dominating. Starting to tighten up the treasury there. That's good. Intel's nice run for the month suffered a little setback this week. The entire big bank sector results were really good for earnings. So now we can look at Goldman, Travelers, American Express. Let's just isolate the banks for a second. American Express, JP Morgan, Goldman Sachs, Travelers. Dude, JP Morgan, the big bank winner. Pound it. All of the pain and suffering that came out of the regional banks rolling into the big banks, right on schedule. The usual suspects here in ETF Max. Europe and gold. Vanguard European stocks. Sweden and Austria. Europe. Yeah, okay, South Korea, you can play too. Now, then there's a big gap from the top 30 to the bottom 10. The only sign of life was in biotech. That's a good sign of life, by the way. We saw that starting to creep into the sniper. Regional banks still getting murdered. Where's all that money going? Oh, yeah, that's right. Big banks. It's good to be king. Tech. That's the Qs. Mexico has been crushing it. All of Europe is strong. European 350. Euro Asia blend. US tech. Bullish normal. Euro Asia blend is better than the S&P, and inside the US it's tech, large caps, mid caps, small caps. Out of the whole stack, the strongest is Europe and the 350s, and the tech, and then the weakest is Latin America and US small caps by a long shot. Eight of the 10 sectors are on a buy signal. That means they're greater than their 4-month moving average. And that's why we went from 60-40. It got a little bit better, and that's why we're 80-20 in this theoretical model allocation strategy. Check or hold? Yeah, the earnings from JP Morgan only confirmed what everybody already knew, which was that all of the money was getting pulled out of the regional banks because of fear and getting stuffed into the big banks. So green was great, still great, reinforced trend following, winners are winning. That's these guys. Gold, Europe, Italy, France, tech, emerging markets, Germany, tech. Sound familiar? Green and white. Was good, now great, exploit new strength, and you can turbo these intraday because they are the new leaders. Silver. Vanguard growth, that's tech. Switzerland, Europe. Russell 1000 growth. That's a large cap growth. So depending on what kind of strategy you want, looking at the strength and then the consistency out of those two columns, you can find the color code, how we assess it, what the swing trade strategy might be, and then which ones do you really want to turbo? The extremes, that's the intraday pile on, or even the 30-minute pile on. All right. Liquidity report based on ATR percentage, the top 30 by average daily dollar volume. And then we like the most liquid ones. Regional banks. That used to be 8% 3 weeks ago. So that is over. Semis, gold, China, oil exploration, Brazil, and biotechs. Biotechs. XBI. This is the complete list of the 130 most liquids. Shift into the daily. There's some sniper trades of the day, and we've already seen that. And we've seen dashboard 1. Let's zoom in a little more here now. Lots of auto framers. This is the order I basically look at things in. Auto framer first, then the NDX. I see green lights and red lights, and like a raccoon. I'm interested in Devon and Goldman, JP Morgan was up 7.5% today, leaving travelers behind. So who's the winner? JP Morgan. Oh, I guess we should acknowledge the 551Ws here. 2.2 to 1 in Cisco, NVIDIA, Tesla. 551W, remember? 5 weeks, here's today's price. It's higher than it was 5 weeks ago. If I go back 5 days, it's lower than it was 5 days ago. And then the 1 day candle is, it closed higher than it opened. And there's a 2 to 1 to the 10-day high. That's 551W. That gives you like a COTA 2 with room to go. In the ETFs, treasuries, they are the only ones that have an auto framer. No breakouts today. Brazil on the rampage. Energy coming back. Auto framers. Tesla has the best payoff. So it's got to be on the short list. And Intel has pulled back enough. It's now got a favorable auto framer. I like. Today was relatively small range day, although it started off like it was going to be a monster. But still quite a few that were pinched. Tesla was a pinch. Oil exploration was a pinch. JP Morgan and McDonald's. JP Morgan was a pinch. Yeah, because it was a big gap up on his earnings. But the daily range, the intraday move was small. Those two right there. Regression line fractals. These guys right here, the most ATRs below their 270. So Travelers is 2.8 below its fair value. These are ATRs. So Caterpillar, ExxonMobil, it's about fair value really. Now the overheated relative strength winners, the most numbers of ATR above their own RL270. Relative strength leaders, so they could be continuation plays or time to preserve that run up of capital gain before it sells off. So it could be either one of those plays. Look at our semis. NVIDIA and Intel, 9 ATRs over fair value. Microsoft not far behind at 6.7. So these are the relative strength winners. So they are pulling away from the market. The winners are winning. And then you say, how much is that still rational, or is it exaggeration? And from here, is it going to fail back to the mean, or is it really going to go? That's why we like it, because it has everybody's attention. You start with the abnormally deep value plays and the abnormally accelerated plays, and from those extremes you are more likely to get great big moves. Well, why is that? Because if you segment by a population of targets, and you say the ones that are relative strength leaders could either have a huge follow through or a huge sell off back to the mean, and then the bottom feeders could either be deep value, they're going to recover, or just going to collapse further, while the guys in the middle are just kind of muddling through. It's by paying attention to the extremes that you get more extreme moves. Yeah, Nvidia is just crushing it. Snipers, and specifically the Godzilla, 3 Godzillas in the S&P, all quiet. 1 Godzilla in the tactical symbol set. VIX, look, that is the absolute absence of volatility. When that explodes, whoa, that will be the sound of a thunderclap at midnight. Looking at the S&P on the daily sniper stats, got a couple that are double volatile. This is sorted by the one-day movers. How many standard deviations above normal volatility it moved today. The most volatile, this is based on 5-day descending. These are the ones that are abnormally volatile in 5 days. Hello, JP Morgan. So it announced earnings today, but it's been exceptionally volatile for 5 days. You know what that means? That means for the last 4 days, people have been buying it because they knew what the earnings were going to be, which then gave it a great big boost, and then it closed strongly. So all of that extra buying is insiders and their little whispering. No evidence to prove that. That's allegedly. But that's what you get by studying the 5-day movers. I like this move here in Dish. That's one we're short on. And so that could be, that's volatility to the downside, by the way, which you can tell by seeing it's on a 007 right there. And this is all collapsing. That's in the middle of a meltdown. The stuff briefs itself. Standard auto framers for the sniper. So on this one, because of the big sell-off in the morning, I sorted by percent change today as opposed to the risk reward. So this is looking at relative movers, the strength of the relative movers. So all of the metals were bad. Metals bad. Semis good. Nvidia best. Nvidia. Standard work. The big 2-day winners. Ethereum. That's how you know. Normal winners, longer term winners right there. And then this little, so if we just draw that line right here, this little segment isn't bad either. McDonald's and Merck, Nike's close second. Exxon Mobil's pretty good. Boeing used to be massive and just got slaughtered. Good. Weakness in the metals. Cliff. U.S. Steel. And then finally our frog trading value list. So what we get is the combination of consistency of daily moves, which you get from the frog quality number, times a large range percentage on average. You multiply those together, you get the trading value ratio, and then you sort that by biggest to smallest, and that gives you the preferred targets for short-term trading. Tesla, marijuana, clean energy, Nvidia, Texas Instruments, Devon, Intel. That's how you find them. What should you be trading? Large, liquid, reliable movers. Market mosaic, so we'll go a little deeper now. The blue line is the slope of the 30-period regression line. This is a polynomial regression line. It sort of helps you figure out is this thing getting stronger or weaker, and what's the trend. This is the slope of the RL30, the slope stat over the last 180 days. That gives you average and then plus or minus 1. And it shows you that the plus or minus 1 channel really defines the normal cycling of the dang index. So when it gets that good, when this thing it starts getting steeper and steeper. When it gets that good and starts to roll over, it's done. That's how I can say I'm concerned about that move, because it's now getting close to plus 1. It's still above its own 10-day moving average, but when that rolls over, it tells you that this run is done. But it's not over yet. Not over yet. But it did end in a doji today. Just saying. Little doji at the end of that. We're coming into the hairpin turn. So then when you look at the longer term slope over the same thing, slope stat over the last 10 years, and you put the COVID on that, you see that the previous volatility was tame compared to the volatility we've seen in the market after. Look at the size of those amplitudes. That's what makes swing trading so good right now. And on the longer term historical measures, realize we're coming close to another turning point if history rhymes. And so that kind of recovery means that the test at 420 is really crucial. It's got to get through that to become a move like that. And volatility, whether you measure it by the size of the standard deviation of price over the last 30 days, it's really small. It's really quiet. And then if you measure it the way we normally measure it, by ATR divided by price, look how quiet. That's the absence of volatility in the S&P. I mean, how long can it stay that quiet? What could make that really explode? From out of the train station where it's resting, a big move up or a big move down, and then this will recover its normal volatility. Can we bracket that and just follow the price? Well, let's see. There's some problems with the VIX that are starting to creep in, is that guys are now starting to move their volatility plays out of the um, futures contract itself into the longer term volatilities and some of the other derivatives. So some of the buildup of pressure is not being reflected in S&P futures, but in other instruments that take advantage of volatility. So it's sort of like snow is accumulating on the mountaintop. So if you study, uh, avalanches and whatnot, which people do, you got that snow-capped mountain. So you start getting snowfall and it's accumulating. And then there is it's like a big pachinko game where there's some trigger event, T, which then causes it to cascade, and then each of these start triggering, and then pretty soon you start getting this magnitude of the move, and that leads to a sudden surprising avalanche. So it's always trying to figure out how much latent volatility is implied in the way those things are stacking up. As I was describing it with to Jim Carroll in discussions today, the imagery was like this: that all of these little algorithms that are driven by AI are finely tuned to check for a trigger event and then start seeing the dominoes rolling over. And then that, when enough dominoes fall over, that triggers them if there's a move on, and then the algorithm comes in, and then his buying triggers more and more and more. So it's what you almost want to do is look for these long strings of potential dominoes being tipped. And that's sort of what happened in the financial crisis, when everybody had counterparty debt and nobody knew how much exposure anybody had. And once the trigger event of mortgage foreclosures happened, the dominoes started falling, and nobody knew how long the domino trails were. That's like if you are managing a forest and you don't have any fire breaks, and then you've got all of this deadfall accumulating. Now suddenly a spark hits, and that thing starts raging out of control in every direction, and pretty soon the entire forest plot is in flames. So if you're managing that, what you got to do is have enough fire breaks so that if you get a fire in one of these little areas, it is contained inside the fire breaks. Well, what that means is that you don't have any trees growing in the fire breaks. Yeah, but that means that it's harder for the sparks to arc over into that. So you can control that instead of unrestricted burns. So the real question is always, if you now take a side view of that, and I got all these trees, and I've got this accumulation of deadfall, this combustion material for fires. Now suddenly, if I get a spark, that thing starts going in every direction, unless I have built firewalls in there that allow me to, localize. So in my view, what's happening with AI is that AI is doing a very good job of, if I have, that is the population of traders, and now AI is becoming and algorithms are becoming an increasingly large part of that. Now there's smaller and smaller human psychology happening, and then when the human triggers on fear and greed, then you get that cascading effects across all the algorithms, and then they are so fine-tuned to start front-running other people. This algorithm here says, hey, that algorithm is going to trigger after 3, so if I see 2, I'm going to trigger on 2, because if one more triggers, then he's going to go. And pretty soon all these algorithms start getting lined up trying to front-run each other, and that's what the dominoes are. Each one of those guys has some finely tuned, instantaneous on trigger, and then now you get these long trails. So what happens? you get like an avalanche that occurs. Some little human does something from emotions of fear or greed, and then that starts this little cascading. And if there's enough of these algorithms connected, pretty soon that turns into an avalanche. So what do you do as a human? You can't out execute them, but what you can do is say, look, I would expect to see more like when I see abnormally quiet conditions into a compound critical state. Other humans are taking bets on directionality. I'm not. I'm taking a bet on the size of the follow-on move once that thing starts to go. I don't care where it goes. I just want it to go far and fast. So I'm ready to just follow price out of our little box. So if I can minimize the size, I want the minimum manageable risk box alerted around a compound critical state, frame it in both directions, and then use vigorous management to move my stop out of danger and into the money, and then just see how far it goes. Lather, rinse, and repeat. So in a population of symbols, I want the ones that are most pinched and in the compound critical state, and these ones at the bottom are the ones that are already running. So that's why I look at the volatility. I want the ones that are abnormally compressed and haven't started their move yet. They're like those little coiled springs ready to go. And then at the very other end of volatility, I want the ones that are already making these huge moves because they're in play. And that's either going to continue to go or start to reverse. That's why we look at the extremes in a population of relative strength, in a nutshell. So now what can we say about this one? Price last 180 days, and here's plus or minus one standard deviation. So that's the average, the 30-period average, middle of the river. And now this thing is the plus or minus one. So it's had a nice little move out of the river and is starting to roll over. When it did that last time, it did this, and it did that, and it did that, and it did that. So what do I think? Could it do that? If you don't think it can do that, you're not paying attention. How much further north, once it gets out of here, how much further north can it even get? That far. That far. That far. So it still has the potential to get to, wait for it, 420. What happens at 420? Does it break through or does it revert? I don't know. But it could start reverting here. That's why this is so very interesting. This is like the little, that dragon coming up out of the river and peeking around to say, which way do I want to take us? Do I want to chase him north or chase him south? I don't know. Once he starts chasing him, hey, what happens on the other side when he comes out of the river? Yikes. Double yikes. And now I want you to notice that most of the time, the pain and suffering is in the crossing of the river. Because what's happening there is all the gains got erased. All those gains got erased. All of those gains got erased. All of those gains. Are you going to let it get all the way back to 385 before you start managing risk? You better be managing risk right here. Otherwise, you're going to keep losing against the crocodiles in Crocodile River. Now, with that in mind, we realize that the green line is at some moment is +1 and that's -1. So now let's go look at the z-scores of three slopes. The thin blue line is the 10-period, that's the dragon, the slope of the dragon. Look how volatile those little swing. That's why 10-day swing trading time frame is so powerful. Look at the size of these moves that you get. That oscillation allows you to take advantage of the swings and just get the fat piece in the middle. And now you slow that down, and now you look at the z-score of the health of the trend. That's the 30. That is your buddy. And the turning point in the 30 is where you get owl entries. It was bad, and now he's getting better. That's where you find owls in both directions. If I could only trade one thing, I would want to trade the slope of the 30-period regression line. And then if I look one time frame higher, the 90, those little turning points are nice as well. Now, this is interesting where we are right now because the 90 suggests there's still room to go. The long-term goodness. And the 30 is just announcing, yeah, I'm still positive. I'm not showing any signs of rolling over yet, but I do feel obligated to tell you that I am at the limit of my normal gains. And in the past, I've only ever been able to get out to Z plus 2. So there's room for one more surge in the 30. But when that rolls over, bud, so now we can put the 10 in into context, because the 10 reached his little peak of plus 2 and rolled over just like he's supposed to. This one out to Z3 is the real anomaly. And that was the second leg up. So you got one leg. The second leg up was the surprise, and the 10 went from -1 to +3. The 10 has already pulled back to the midpoint. Now, here's what happens when it's back to the middle of its own little mean. If the 10 resumes, then you would expect the 30 to continue and the 90 to continue. But if the 10 gets weak, then you would expect to see the 30 to roll over in here, and then you worry about this. So the 10 is your early warning about the significant turning points in the 30. That's how you read this chart. This chart is massively good. Nobody else looks at that. That is your long-term, adaptive, statistically informed, objective measure of the time frame that you care about is the 30, so you dial down to the 10 to get the tactical early warning. Scouts are out. So if the 30 is my main body, the 10 is my little scout who's looking, what is it doing? And then the 90 is the longer term momentum that's helping to push me wherever I'm going. So the 30 is my buddy, the 10 is my scout, the 90 is my next level of fire support. And so what I'm saying is the 90 is telling you that there's guys that want to believe, the long-term buy and holders, that want to get this thing back to 420, 430, and 480. The big institutional monies. They would love to see that. But the 30 is at a tactical or operational checkpoint, and the 10 is rolled over. So you got to respect what the scouts are reporting. What's he finding? The 10 is already starting to fail. So that's why this is very interesting here. The 10 is starting to fail because this long run up stalled a little bit this week. That little piece of stalling right there is enough to take the strict upward slope of the 10 and make the slope flatten a little bit, and that's why this rolled over. But it's back to normal. That's a normal pause and a hesitation. On this normal pause and hesitation, it surprised everybody and did that. On this one, it surprised everybody and did that. It got to Z2. Well, it's been to Z2 on this. It's had two legs up. Leg one, leg two. I don't know. I don't know, but I'm watching this very carefully. And that's why I like the 30-minute chart. Because I get 15 30-minute candles inside a single trading day to do something with if that rolls over. Enough. More on this later. All right, that's everything we got for today. Hopefully you found that helpful.